Welcome to Kansas City Real Talk, brought to you by KCRAR. I'm your host, Alex Gehring. Guys, I'm going to paint a picture for you really quickly. Let's say that you take on a listing and there's something in your gut and you can just tell something's not right. And you do the right thing and you pull a preliminary title report. And lo and behold, you look at that preliminary title report and you see that there are income tax liens filed on that property. The question immediately becomes, what in the world is an income tax lien, number one? And number two, what do I do about it? Well, we're going to be talking to Jennifer Moutray today, who happens to be an expert on how to handle income tax liens. So you're going to find out how to make sure these things are addressed. Spoiler alert, it's probably not something that you better be advising people on. You're going to find out how to handle this situation. I'm so excited for you guys to hear this interview. Let's go get Jennifer. Welcome back to Kansas City Real Talk, brought to you by KCRAR. I am here with Jennifer Moutray, who is one of our industry partners with MLB. Jennifer, it is so nice to be here with you today.
Yes, thank you for having me.
Absolutely. Tell us a little bit about your journey. What about your experience at MLB makes you qualified to talk to us today about tax liens?
I come from a background with working in a tax resolution business in Colorado. With MLB, basically, I'm just doing lending.
Yeah.
But I do know in this industry, people do run into tax liens.
Absolutely. And do you feel like we're seeing an increase in tax liens right now that are maybe being hurdles to closings?
Maybe since the government shutdown, since everybody's back in the office now, there are about 5 million tax collection accounts. So it wouldn't be a surprise that you would run into one before.
Got it. Okay. And so how common are tax liens?
I would say pretty common. There are, I would say 5.3 million delinquent counts in collections. Now, these tax liens are IRS and state tax liens.
Okay. And these are income tax liens.
Income tax liens, not property tax. Property tax, I would assume you'd have to pay them or get at the auction block, property tax. So with this, it's if somebody owns a business and they end up owning employment taxes, the IRS can file personal tax liens on what they call trust fund or income taxes, 1040s.
I see. Okay. Yeah. So how might somebody end up in a situation where they end up with a tax lien?
Owing over $5,000 or more, the IRS can file a tax lien.
Got it. And then, is that similar? Does that end up being the primary lien?
No. For every different tax period, there could be different liens filed.
Okay, I see.
And so whenever as a lender, and we go and start pulling title, or, we use title, and then title starts pulling on the property, and we see the different liens, mostly we want to try to hit the ones that are on title. Now, that may not be all of the IRS balances that they have out there. Mm-hmm. So there may just be tax periods that do not have liens filed on them. I
see. Okay. So walk me through this just a little bit then. So how do I, as a licensee, know about these tax liens? How can I identify them?
You'll find it on title.
Mm-hmm.
We can also, as a lender, we find it on a credit report. Okay. Now, as a realtor, I would assume you probably have to ask that question. Okay. People know if they owe taxes or not. Or I can
get it from the title company.
I
order a preliminary title search.
Yeah. Most people know if they're selling a home that there may be a tax lien out there, and they've probably already discussed that.
I've had experiences, unfortunately, where they may not be extremely forthcoming about that situation, which of course puts the licensee at some risk. I always encourage my agents, if they feel like there's a chance that something, because sometimes you just feel something in your gut and you're not exactly sure what it is, I always just encourage people to file or to request a preliminary title report from the title company so that they can take a look and see what might be out there.
Yeah.
Right. So, because I've seen hundreds of thousands of dollars on it.
Yeah.
On tax liens.
Yeah. And tax liens are a public record. So anybody, honestly, you could go to your county recorder's office, and if you're good at that, pull up your the land deeds, and you can see if there's a lien out there. normally people use their title company for that.
Absolutely. Absolutely. So somebody has a tax balance, an income tax balance. That lien gets filed. How are they then notified that that lien has been filed against their property?
The IRS will notify
The
them.
IRS notifies
They
them.
will always
It's
mail
certified.
it to you.
They mail it to you.
Yes.
And then hopefully you read it.
Yes.
Right. Okay.
Many ignore it, but
Many ignore it.
you should read it.
You better read it. So I find out that I have this tax lien on my property. What does that mean exactly? Does it just mean that I don't really owe anything on it until I sell my property, or what is it? What does that mean?
Well, that means basically if you want to sell or refinance a property, you need to address that lien first.
What if I just want to hold on to my property forever?
You can do that. There usually is a 10-year collection statute.
Okay.
Now, the IRS has been going through and filing more judgments.
Okay.
So even at the end of my 10-year statute date, then now I've got a judgment. So sometimes they wait till I die and they'll take it.
Understood.
Yeah.
What kinds of professions are there certain professions that are more susceptible to tax liens than others? So go ahead.
Yes, and it's a really sad situation. Healthcare, in-home health services, dentists, anybody that takes Medicaid, Medicare, the IRS, or not the IRS, the government is about 120 to 180 days of paying them out. But by that time, they've already had employment taxes, they've had payroll, expenses, supplies, rent, and so their taxes are always the last thing that gets paid.
Absolutely. And I feel like this is one of those things that hopefully, like you said, hopefully everybody's being honest about it. But I do think that this is something that people just aren't really comfortable talking about, vulnerability with their financial situation. And also people aren't thinking about healthcare professionals and saying, they might not be able to pay their income tax.
No, we see a lot of healthcare industries. You would think that they're lucrative. You're a doctor. But yet again, you're not getting paid out on your Medicaid, Medicare. A lot of them just stop taking it. But then you have people in nursing homes. How do they pay their bills? It's really not just because somebody chose not to pay their bills. There's usually circumstances behind it.
There's usually some reason why it's happened that way.
Yeah, and I've worked nationwide. So I always seem to get a lot of Alaska clients. But, I've had a restaurant burn down. I had a gentleman, he cashed in his 401k. His wife was sick, and basically that's where his tax problem came from.
Wow.
She ended up passing, and there are sad stories.
Absolutely.
Yeah, so
Absolutely.
it's not uncommon, but like you said, most people don't want to talk about it. And whenever I call people, they're not trying to talk taxes or talk with me.
No, of course.
But we do.
So if I have a tax lien on my current property, has it messed with my credit in such a way that I might not be able to qualify for a mortgage on my next property?
Now, the lender that I started working with, I was actually referring my clients over to her. And so she found a lender that would take it, and as long as we had a subordination or the discharge or anything like that, then she could touch it. She said, basically, if you have a tax lien and great credit, then it shouldn't affect you too much. Now, if you have bad credit with a tax lien, you just have bad credit.
I see. So income tax, not paying your income tax might not actually get reflected in your credit report.
It will probably show as a remark in your credit report,
as a
but
remark.
It may not be just such a ding that you can't refinance or sell.
Well, that's kind of interesting. I'm curious, why do you think that is? It seems like if you haven't paid your income tax, it seems like maybe that should be a flag on institutions to maybe not feel like you can uphold your financial obligations.
I'm sure it's going to include a letter of explanation somewhere in there.
It'll require a letter of explanation.
I'm sure of that,
yeah. It's interesting. And this is sort of an aside, I guess, but when you hear something like that, it does kind of seem like if that's not going to impact your credit report, part of what people are banking on is that you're going to have to continue to take on credit.
Yeah.
Right?
Yeah.
Oh, you owe money to the IRS. You need credit.
Mm-hmm.
You need to take out credit. you need to pay us interest, you need to pay us fees.
Yeah.
It seems a little predatory in a sense, but we don't need to get into that
all the fun
necessarily.
IRS stuff. Yeah. I would just say that it is cheaper to refinance your home and take that interest rate as opposed to what the IRS is going to charge you for interest rates.
I got you. I
Yeah,
understand.
they're not a bank, and they will let you know they are not a bank. They're not trying to be 10 years out on getting paid. They are trying to get their money as fast as possible.
Absolutely.
That's why
sense.
sometimes I have to look at, if I'm doing a collection case, look at the equity in that property.
Okay.
The IRS, the revenue officers, are going to want me to address that equity.
Yeah.
And so even if it's reaching out to a lender, and if I do not qualify, then I need at least a rejection letter.
Talk to me a little bit about what the interest. What do you think the interest rate might be on IRS?
Oh my gosh! So I do usually employment taxes.
Okay.
And so there's 4 quarters in a year. And so you think about each quarter has a different rate. Sometimes we're at 8%, sometimes we're at 12%. It just depends on which quarter you're in, which year. Yeah.
Got it. So if I owe money to the IRS and they've put a tax lien on my property, as I accrue interest, does that interest then get applied to that lien? Or would that eventually be another tax lien that they might put on the property? How does that work?
Normally, it's the balance that is owed on the tax returns that show up on the lien. Because whenever title shows me what they have on their reports, and then I go to the IRS and see the total balance due, they're different amounts.
Of course. Okay, that makes sense.
And of course, interest changes every day.
I see. Yeah. And so they record that balance due.
Right.
But then as the interest accrues, that might not be all that's owed on
Correct.
that lien. So the lien actually reads that it's the balance due plus any accrued interest prior to payment.
Correct.
Understood.
Correct.
Okay.
And that's kind of where you want that tax professional to look at, because there may not be liens on each tax period.
I see.
And so you just basically want to pay what's on title.
Okay.
Title in our credit report may differ.
Does filing for bankruptcy absolve people of tax liens?
1040 taxes, you can get rid of them after 3 years. As long as they're, I guess I should say it as long as they're 3 years or older.
Okay.
Civil penalties, which is called trust fund, that's the amounts withheld from employees' paychecks.
Okay.
So as a business owner, I can be held personally responsible for those taxes, the amounts withheld from my employees' paychecks. And so with those are not dischargeable.
I see. Okay. I've seen situations where a seller has tried to get out of tax liens or other debt that's owed.
Correct.
By filing for bankruptcy. And unfortunately, they maybe do it like a week before closing, which is kind of a nightmare.
Oh, I can imagine. Normally, you want to attack this hurdle before you get a contract on a home.
Yes, yeah.
But they've probably done that so that way it stops the IRS in their tracks. If you file a bankruptcy, the IRS has to stop everything.
There you go. There you go.
And so who knows if they're getting levied, and I'm sure going through the lending process, if they see IRS levies hitting your bank account, there's going to be a lot of questions.
And these are things that real estate agents just don't deal with day in and day out. I think it's really important that if you're in a situation like this as a real estate professional, you know that somebody's got a tax lien, it's important that you don't try to give advice on how to handle that lien. And you tell them to consult with a tax professional, or you tell them to consult with an attorney, especially a bankruptcy attorney, if they're considering bankruptcy, to make sure that that timeline is right. It isn't something that they should handle and start to think about a week and a half before closing.
We have a little joke in our office, and it says, in the tax office, and it says it would take somebody 8 hours a day for 20 years to read the entire Internal Revenue Manual.
Wow. 8 hours a day for 20 years.
Yes. That's how massive it is.
That sounds efficient.
And so whenever you go and start looking at it, there could be exceptions to the rules. And most people think the IRS is black and white, but then we operate in the gray area.
And so if we listen to one podcast brought to you by KCRAR and think that we can give people advice on how to handle these tax liens. We're obviously incorrect on that, right?
Yeah. Feel free to give me a call. I definitely could do complimentary scenarios and everything, so that way people kind of understand. I've been acting as a barrier between the IRS and taxpayers probably since 2004.
Wow.
Yeah, I've been licensed as an enrolled agent for 18 years. I'm a shareholder in a tax firm in Colorado. And here I am in the residential mortgage business in Kansas City, Missouri.
What is it like being that kind of an intermediary and talking to the IRS? What's that like?
Well, it depends on their mood. It depends.
You're talking to a real person?
Yes, you're definitely talking to a real person, and it depends on the history between the taxpayer and the revenue officer. I've had a taxpayer that chased a revenue officer off their property with a gun, so obviously that revenue officer is not going to be very lenient.
Wow. Wow.
So, and it depends on their history. How many times have they defaulted agreements? Are they a repeat offender?
You don't think about the tax ramifications of interpersonal conflict very often.
No, but like I said before, they're pretty angry and they do not want to talk to me about taxes. Of course, I'm the good guy, the one that you would hire. And so it's always, a lot of times with the revenue officers and the IRS, if you just get on their level and realize they're a normal person, then you can get a lot farther. Kind of like the honey and vinegar thing.
Absolutely. It makes sense. So what kind of timeline would a person look at to take care of a tax lien? Like you said, ideally we handle something like this prior to listing the property for sale, right?
Yes.
So what's that process look like and what's that timeline?
Now, if I'm looking at selling a home, I would have to do, if I'm not going to pay it in full when I sell the home, the tax lien, then I have to do a certificate of discharge, basically removing the tax lien so the buyer can come through and purchase it free of the tax lien.
Okay.
Now, if I'm doing a refinance, I have to do a subordination that moves the IRS into second position so my lender can be in first position.
Of course.
And I would say give that at least 30 to 45 days.
30 to 45 days.
Now, the IRS is probably going to ask questions, and they're going to want to know, how do you resolve the rest of your balance?
If somebody is truly in financial distress, 30 to 45 days is a long time.
It is, and that's sometimes why they file bankruptcy right then.
Right.
If you do something like you go to resolve a tax matter, let's say we're doing, you always hear the commercials, pennies on the dollar.
Right.
Now, I'm not saying those people are bad people by any means, but definitely do your homework before you hire them. A lot of them get you in the door and then they charge you more money.
Yeah.
Or they kind of give you a runaround and things like that. But the pennies on the dollar, the offer and compromise, that can take like 9 months to up to a year.
For some people, we keep on talking about bankruptcy, but for some people who might be selling their home just to get out from under these income tax liens and that debt, for some people, is it better for them to file for bankruptcy?
If they're selling their home and it's going to pay it off, sometimes peace of mind is worth it.
Okay.
But if I'm not going to be able to pay that off, I would go ahead and sell the home if that was my plan initially, and then do bankruptcy. Okay. And again, obviously, you should talk to a bankruptcy professional. We should never, as licensees, we should never give advice on this. But do you think that there are some instances where bankruptcy is absolutely the it sounds scary. Yeah.
But isn't it sometimes the best option for people?
Sometimes the trustee in a bankruptcy can work out a better deal than what I can, just because they're going as the big picture, where I'm just addressing the tax issue.
I understand.
And there are many times I do push somebody towards bankruptcy.
Yeah.
With this government shutdown during that time period, I noticed the IRS basically was not in the office.
Okay.
And so what they did was they set up the accounts on an automatic tax levy.
Okay.
And what that means is there's nobody to call. I can't talk to anybody. So every week they were, instead of receiving their payments, they was get picked up on the levy program. Wow. And so with that, if I push them to bankruptcy, then at least I could get that to stop.
I see.
Yeah.
Okay.
And we're talking restaurants in New York. They're constant. Every week they have a levy on their bank account. Well, how in the world will they pay the rent, their employees, the food, things
Absolutely.
like that? Healthcare, again, like I said, is a big one.
Wow. So you've talked a little bit about the shutdown. Why has the shutdown been so unique in that? Just because people were out of the office and they weren't doing that piece of things? Is that the...
Well, it depends, again, where a person is in a collection process.
Okay.
Because if I'm already under a levy and the revenue officer said, hey, I'll release this, and then they're on shutdown, then by that time I'm past my 21-day marker with the bank, and I can't get that money back.
I see. Okay.
Yeah, it's nice to have a human touch in there.
Are we in any kind of a backlog since that shutdown was so lengthy? Are we experiencing a backlog still today?
We're at a backlog from COVID.
Yeah.
And everything. So everybody's been on backlog. Normally, the IRS is about 2 to 3 years behind on doing audits. So if you have something that comes up from 2022, that would completely make sense, even though somebody like my mom would be like, I already did this, 2022, but they're just now at this time frame.
Yeah. Do you think that artificial intelligence and some attempts to accelerate and optimize some of these processes, like how long did it take? Like it was for 40 hours a week. How long was it going to take you to read the IRS manual? What did you say? How long was it?
8 hours a day, 20 years.
For 20 years. So obviously that's totally unrealistic. AI helps a little bit with something like that. Do you expect the efficiency of these processes to help people that are in this situation down the road? Or does efficiency actually create more burden or more financial burden for those folks?
I think the efficiency will be there, but the human touch won't.
The human touch won't.
And if somebody is in dire need of help, you want to be able to speak to the revenue officer. If I cannot get anywhere with the revenue officer, I step it up to the manager.
Okay.
I step it up to the territorial manager. We had an issue one time in Louisiana, and it was a home health care, or maybe it was a nursing home. But anyways, they were having that flood. I don't remember if it was Katrina or what it was. But anyhow, everybody was evacuating. And here we are in a nursing home. We cannot evacuate these patients. So now we've got a duty as a healthcare provider to still make sure they are safe.
Absolutely.
And so I had to reach out, and I'm not sure who I contacted, but they were definitely a head honcho in the IRS, and everybody and their brother asked me never to call that person again. But we got it released, and the elderly, they got out of there, but you have to bring up that, we're looking at criminal action on neglect.
Oh my gosh.
Yeah, so it could get ugly. Again, but it depends where you are in that collection process.
That's crazy. So here's a question. Does the IRS always accept the discharge or subordination? So when you apply for this, do they always accept it?
Not always.
Not always.
They're going to want to know if you're going to address the rest of the balance.
Okay.
They're going to ask a lot of questions. Are you a current compliant taxpayer? Have you made your estimated tax deposits? Are you missing returns? Those are kind of questions like that. And then again, how are you going to address the rest of the balance?
Okay.
They look at it as the best interest of the government.
And how quickly, like and that's kind of included in that almost 45 days, like that communication as well. Is it possible, based on your answers, that it ends up being a lot longer than that?
It can be if they ask more questions.
Okay.
The IRS can come back and say, hey, on this property, we want more information, or your bank statements for here. I basically have to show the IRS why it's in their best interest to take that subordination or discharge.
With each back and forth, how long does it take for the IRS to respond?
Initially, when you file it, you're going to a service center,
Okay.
and then you get a human.
Okay.
So once you get the human, you've got a direct contact.
It's pretty quick. And at that point, you're talking to them on the phone.
Yes.
Okay.
And I'm a power of attorney. Like I said, I'm an enrolled agent. And so I have the ability to just call and not receive information. Like 8821s, your title companies, lenders will file an 8821. That's just an information request return.
Okay.
So I can receive stuff from the IRS, like your transcripts, your 1040 records, things like that. As a power of attorney, I can contact them directly and negotiate deals, things like that.
Got it. So if the IRS says no, what are the person's options?
Well, then we got to figure out, why is it a no? How do we make it a yes?
Okay, and why might it be a no?
It could be a no because I had someone sell their home and they wanted to keep, I don't know, $50,000 in their bank account because they worked hard for it. And so the IRS is going to laugh and say, no. You owe taxes, so here's what you have to do. You may have to go get another job. And I understand the taxpayer's point as well. They did work hard and fell under unfortunate circumstances, and it's nice to have a little safety nest there.
Yeah.
But just as like a lender, they're going to ask questions.
Of course. So once you receive a no, is that deal dead?
No. I can appeal it from there.
Okay. How long does that appeal take? Another 45 days?
Well, maybe it could. It depends on how. Normally, I try to work with the person that is working the account and try to get them to change to a yes.
Okay.
Or contact their manager to see what it would take. It's kind of that thing, even if one person says no, then I go to the next person. I go to the next person. I never exactly roll over at a no.
Right.
I'm pretty persistent. I've heard that before from revenue officers. I'm pretty persistent.
Does it happen, though, that you keep on going up the chain and the answer is still no?
Sometimes it may be like a loan. We may have to restructure it.
Yeah.
Come back and offer the IRS a little bit more. Something like that. And it's also getting the taxpayer on board for the same deal.
So if somebody were to reach out to you to have you assist with this kind of a situation, would that fee then, could you collect that fee at closing as well as part of a settlement statement?
I think as long as there was already an entry in there, I just know it could not be contingent.
Okay.
It cannot be contingent on that closing. Even if it did not, if it was not accepted, they would still have to pay.
Yeah, got it. Okay, that makes sense. But kind of like a roofer.
Yeah.
They might be okay collecting their money at closing.
Yes.
But if it doesn't happen, they're still going to want their money.
Yeah, they're still going to have their hand out.
Of course. Okay, that makes sense. So with so much experience in the tax world, what ended up being the draw for you to get into the mortgage world then?
Well, like I said, I had a lady I ran into. Her name's Jennifer Herbert. She's in Colorado. She's a lender.
Okay.
And that was who I was referring my tax clients to.
Got it.
And as she's getting older now, she just said, Jen, go get your license and do this yourself. And so, and we're still great friends. She's one of my best friends. I love her.
Yeah. And
I love it. I do enjoy coming over and learning this side. It's very humbling, I will say.
Yeah.
I've learned a lot. There's been a few times I've cried, but I love it. I guess it's I don't know. I guess you can't stop learning.
Of course, yeah. And that's the best thing about every part of our industry.
Yeah.
You deal with new people every day and new experiences every day. Every house is different. Yeah. Every person's financial situation is different.
And I do notice when I mention to people my niche of tax liens and real estate transactions, people's eyes kind of light up and they kind of perk up like, wait a minute. It's
specific.
Yeah, where did you come from?
Uh-huh.
Yeah. And they had no idea that I've been working for this tax firm. I moved back to Missouri, 2008 possibly, and I've just been working remote since then.
Wow.
Yeah. And they have no idea I'm dealing with somebody between Alaska, New York, Florida. Yeah.
Well, Jennifer, if listeners have more questions for you, what would be the best way for them to get in touch?
Give me a call. My number is 816-370-6100. Now, over at MLB, where I'm at right now, I know we have a few great programs out there. We're more interested in putting more borrowers, having more home buyers out there and different things like that. We had a program that just rolled out. It's our MLB's Remarkable DPA program. And basically it's a 2%, look at it as a gift. It's forgivable at day one.
Got it.
And so, like I said, we're constantly evolving. We underwrite, like I said, to DU. We don't have any overlays. And all in-house.
Got it. Well, Jennifer, thank you so much for being with us today. I think our listeners are going to, it's not something that they hear a lot about.
No.
Income tax liens. We know that they're out there. Mm-hmm. We see them on title work on occasion. But nobody's going to take a lot of time to pour into understanding what exactly is going on, because the reality is that a real estate professional shouldn't be giving advice on how to handle those specific situations anyway.
Correct.
I think that the biggest takeaway is if you know that somebody's got a tax lien, you better be making a phone call to an expert who can help that person out and do it before you list the property.
Correct. And like I said, if anybody has any questions, feel free to reach out to me. I will definitely go over a scenario with you. At least give you some advice out there, at least where to go, or maybe if it's something simple, we can tackle it ourselves.
Perfect. Well, thank you so much, Jennifer.
Yeah, thank you for your time.